Hi Martin, hi Jonathan. Great to have you here. So this topic or this panel is really about how do we make more companies come to the public markets? Because at the end of the day, the end game is really to make sure that you can take part of those investments, take part of that growth as an investor, but also for the companies to have a platform for growth going further. And I think, at the end of the day, there's a lot of concerns about the public markets and doing an IPO and how to list. But at the end of the day, it's a great toolbox for the companies, for the entrepreneurs to grow their business in the long term. And there's so much innovation that needs to be financed. And I think in many ways, no better place to finance that innovation long term than the public markets. But let's discuss this today. So we have Jonathan. Do you want to introduce yourself briefly?
Sure. Spoke earlier, so won't go too long, and we got plenty of time to dive into our story here at AppHarvest. But founder, CEO of AppHarvest, we're building large-scale controlled environment agriculture facilities to grow fruits and vegetables year-round, using 90% less water, no chemical pesticides. We get about 30 times yield per acre. So my background was solar and wind development. We were just talking about a company you were a part of. The world is so focused on solving the energy problems, that by the time we solve our energy problems, what are we going to do when it comes to food and water? And so for us, pretty terrifying statistics I was outlining earlier. The UN has said we need 50 to 70% more food by 2050. We use 70% of fresh water on planet Earth today to grow food. Do the math, it doesn't make sense. You would need 2 planet Earths by 2050 to have enough food to feed a rising middle class and growing population. So we at AppHarvest company took our first round of funding in 2018. I had my credit cards maxed and took $250,000 in 2018. And then this year with a board that knew the public process much better than me, encouraged us to go down that track. We raised $500 million, went public on the NASDAQ, and building some of the largest facilities in the world in my home state of Kentucky in the US to grow a fruit and vegetable. But to your point, the way you started, democratizing that process and encouraging, I have a lot of other friends, CEOs, that pushing people out to go public sooner rather than later. It's made us a stronger company, and happy to talk about that in more detail, but just the rigor of the process, and then also giving people the opportunity to invest in companies early that wouldn't otherwise have that opportunity.
No, it's a great story, and we look forward to hearing more about that, this transition process from private to public, and why SPAC and how SPAC. But I think at the end of the day, what you're also pointing to is this appetite to invest, and to invest to support the transition. And that's not only entrepreneurs and VCs, it's also public investors. And they're desperate to look for new investment opportunities to support that transition. And their investment mandates are becoming much more ESG driven. So having companies come to market that have that clear focus is something that the institutional markets and the retail markets are looking for desperately. Martin, you have so many bags or so many tricks in your bag and a great track record. I was joking, when Ronaldo left Madrid, Martin is still here in terms of helping innovation and entrepreneurship. But you have so many things in your bag, but one of the things that you just recently launched was a SPAC on NASDAQ in the US. It would be great to hear a bit more about your background there and more focus on the SPAC that you recently launched.
Well, I became aware of the opportunity of being on the other side of a SPAC, like AppHarvest was on the merging, receiving end of a SPAC, and we're at the creation of a SPAC, 271 million. It's called Levier. It trades on NASDAQ, and we're in the field, or we're focused on new mobility in Europe, right? And so why do something like this? The answer is because in Europe there's amazing engineering, amazing design, amazing car companies. I mean, BMW, Daimler, VW, and then of course the more exotic ones like Ferraris or whatever. And then there's very large companies in the field of public transportation and so on. But Europe is sadly not at the leadership of the transformation. The transformation of mobility is a transformation from I drive myself to work in a combustion engine car to I am driven in an autonomous electric car that is sold to me as mobility as a service, right? And in this future, electrification, connectedness, autonomy, these are all huge trends that are going to transform the landscape in Europe, where the GDP of Europe and the GDP of the US is the same, very similar. There's more cars and more public transportation in Europe, but what there is not in Europe is enough growth capital, right? So what we did is we said, okay, why don't we go to the US, raise our SPAC. So the way SPAC works is you raise an initial amount, which is the SPAC, in our case, 271 million. And then when you find the target, you raise what's called a PIPE, which is an additional amount of money, which can be from 100 million. You said in your case it was 500 million.
Yeah, we raised most of ours in the PIPE.
In the
So
PIPE.
we did a road show. Fidelity was our largest investor, I think around a little over 100 million, and then several. So we raised roughly 400 million in the PIPE and a $100 million SPAC. So we
So
kind
the
of flipped
SPAC
the inverse, where people have usually done the larger SPAC. We did a larger PIPE with the SPAC.
And just to jump in, when you do the PIPE versus a SPAC, these can be different investors. So you have an opportunity to come back to market. You do the SPAC, you raise the money with the ambition to find a target company within a certain space of a certain size, and then you identify a company, but then ultimately you can go back to the market, because then you've identified a target. So the market understands who you're going to work with or partner with, and then you can raise more money to fund that vehicle.
Yes, there's
PIPE.
there's a change of investors, because a SPAC is trust in the SPAC team. Like my team, other than myself, I have my co-founder Yasmin Faj, I have Stefan Krause, who used to be the CFO of BMW and the head of electric vehicles at BMW, and we also work with Faraday, Fisker, Canoo, all electric vehicle companies. We have Bodo Uber, who used to be the management top manager, CFO of Daimler. We have a great team. So people trust this team. They give us the money, but they don't know what we're going to do with the money. So then you tell them, okay, this is what I'm going to do. And for sure, some of the people will not like it, right? The ones who don't like it, it's called redemptions. They go and take their money. They can recover 100% of their money. But then you have the PIPE, which brings the people who like it, right? And to do the transaction. So it is a very interesting mechanism. It was maybe overused by last winter, in the sense that there were too many SPACs going to market. Then there were very few. And now we're reaching a balance of SPAC combinations and amount of SPACs. But for us, being in Europe is phenomenal, because this had not arrived at Europe, and there's many opportunities in Europe, SPACable companies that can go public, and there's not so much SPAC competition, because the SPAC competition is mostly inside the United States. And I have spent the last 10 years of my life living equally in Spain and the United States, in Europe and USA, and I always see this, when things are not evenly distributed, that there's an opportunity there, and we went for it.
No, and I think to your point, we jumped into the conversation, but ultimately the SPAC is just a different way of coming to the public markets. So from the perspective of entrusting a management team to run with your money, so basically you raise money to go out and look for an investment. When you've identified the investment, you then become typically 20 to 30% owner of that business combination, the combined business. And the opportunity is then to go out again to raise more money to support the further growth of that, to capitalize that company. So, and that's the PIPE. But from our perspective, at the end of the day, the fundamental decision is, why go public? Because at the end of the day, as a company, The SPAC is really just one more door to the public markets. And I think fundamentally, the good thing with the SPAC is that one more door was sort of refurbished and made accessible to entrepreneurs and investors because it was closed for a long time. And the focus was on IPOs, which had become very complex. So just one question to you, Jonathan. I mean, when you sort of decided we're going to become a public company, when you started looking at the SPAC structure and compared it versus the IPO, what made you go for the SPAC route? And in hindsight, what are the key lessons learned?
A lot of lessons learned, probably too much for the time we have left. For us, it was, so you were talking about mobility here in Europe and the transformation of the way in which we think of automotive, and it'll be electric vehicle that'll be driven on its own, and you won't even own it, it'll be a service, and it'll show up. And that story doesn't only sell to an investor. By being public, you can engage the public to have these conversations. And for us, we're fighting, we call it the food fight. It's wildly complex. I mean, I'm having meetings with secretaries of cabinets in the US and dignitaries globally, and to be a public company, there's more trust.
Yes.
We have a meeting at the White House. If we were a private company in Kentucky, no, we've gone through the rigor. I've got longer hair and I wear blue jeans, but we're a public company on the NASDAQ that can operate at scale. We'll deploy billions of dollars globally, and we're going to do it, efficiently and effectively, and we're going to be transparent. And being a startup, you at some point have to decide: is it a hobby or is it a company? And if it's a company that's going to be scale, global, and have trust with regulators, you need to be public. And the sooner you're public, it's going to be easier on you. Rather than waiting too long and then deciding to unravel the mess you have of a private company to go public. So it for us makes sense in so many different ways, but from a messaging standpoint, our consumers that buy our product, they know who we are as a company, to governments that we're working with, to partners. The rigor that is forced by being public, yes, it's difficult, but it makes you better as a company, and for us, I don't think there was... but why SPAC? Speed. We hit a moment in time where we were on the front end of that SPAC curve in the US. Yeah. We could have done a direct listing, maybe a traditional IPO, but for us, the SPAC was a vehicle to go public. It was the most efficient vehicle that would allow us speed to capture the capital and go. And for us, I think doing the SPAC was the right way to list on the NASDAQ.
And I think at the end of the day, when you do a SPAC, you need to find a partner. And the partner in your case was the SPAC, who to combine with. How did you decide on that? I mean, because there were quite a few SPACs out there focusing on your sector.
Well, it's more than an Excel file or a spreadsheet. For us, the other team had public market experience. They were a part of transformation in wireless, so they understood shifting industries. And there was a SPAC team, like you said. Your team you've got the CFO of BMW, CFO of Daimler, and your team is going to bring experience to maybe a younger or maybe less experience or maybe equal experience, but strengthen that team. And so for us, the SPAC wasn't just efficient to market, it wasn't just capital, but it was strengthening our team in that public process to where we acted as one unit. And again, it was, we talked to 30, 40 SPACs in a pretty short period of time, and think we landed on absolutely the right fit for us.
So it's really a marriage in the sense of, find the right partner, define what are the key criteria. So besides going to SPAC for capital, you're really looking for the right team that can support you on a long-term basis to grow your business and
100%.
Complement you where you are as an entrepreneur today.
Yeah.
Yeah, there is a generational issue there to some extent. You have a team of generally experienced, frequently older managers who are in the SPAC, people who have been given the trust of public investors. And by the trust of public investors, I mean that if you want to buy shares in AppHarvest, you go online and you buy shares in AppHarvest. or Levier, you can buy shares of Levier. Like these are public companies that anybody in the audience could possibly buy their shares, which is a very different situation that I have in my other companies where none of you could buy the shares unless, well, maybe we have a conversation, whatever. But there's the Securities and Exchange Commission in between you and us, and the Securities and Exchange Commission establishes a set of rules and language to build trust, like you were saying, and then everybody can participate, right? So there's that element of joint work between investors of all sizes and the entrepreneurs involved with these. And in the SPAC itself, there's the new companies coming up with amazing technologies like App Harvest, and there's the team, so people who are experienced entrepreneurs and investors. And in the field of SPACs, there are mainly two kinds of SPACs. There are the SPACs that are led by investors, and there are the SPACs that are led by operators. In our case, we have an operator-led SPAC, meaning that nobody in the management team is a professional investor. Like we're not private equity, or we are operators. But when you look at the results, and McKinsey did a study on this, the operator-led SPACs tend to do better on average. Why? Because operators like us, we help the management team achieve its goals. So it is good to make that distinction. I'm not saying that investor-led SPACs perform poorly in general. There's some that perform great.
Yeah, you are, and that's fine.
Very good. And so that can also happen. But I'm just saying that there's a relationship there that it's worth nurturing.
And I think you're touching upon a point, because I think, SPACs is not something new. It's been there for a very, very long time. Where SPACs became relevant again is the innovation in the financial markets, where basically the financial markets went to look at the SPAC structure and said, we can reuse this structure to make companies accessible to access the public markets. And at the end of the day, there was a big flourish of SPACs roughly a year and a half ago, 2 years ago, and I think it's calmed down a bit. From that perspective, the reason why it's calming down doesn't mean that the market is closed. It's more about that you as a SPAC today need to differentiate yourself much more. And one way of differentiating yourself is the point that you're making, is that how have you built the team in the SPAC? Are you more an operator, or you're an investor? What are you focusing on? What is the track record you have? Because that will create credibility not only with the market, but also with the target company that you aim to partner with. So I think this is a key differentiating factor, and I think that's what we will see more of a trend, is that SPACs is not going to just pop up continuously. It's more about the quality of the SPACs and what is their purpose. So from that perspective, Martin, you touched upon it. There's a need for innovation in Europe. There is good innovation in Europe. Potentially there's a mismatch between innovation in Europe and financing innovation in Europe. And I think that's what you're trying to do. You're trying to go to the US markets, list a vehicle there, because they know how to finance innovation in a better way. And basically you're bringing your European company to the US to be financed by the US capital markets, not only, but partially. Do you think that is the way forward, or is there an opportunity for Europe to stand on its own legs to finance that with the SPAC structure as well?
Well, the paradox of Europe is that, for example, if you look at Nobel Prizes, which you could say, well, Nobel Prizes are about really scientific innovation. So with Nobel Prizes, Europe stacks up very well with America. There's more European Nobel Prizes in science in history. But America ranks much better at turning innovation into companies, right? And the most valuable technology companies in the world are American. But lately, I mean the last 3 years, the number of unicorns coming out of Europe is striking. It's extremely large compared to what happened before. Europe is learning how to go from the basic science that we do so well in Europe to the company that actually puts this product into market, right? So to go from science to technology to a functioning company. And so I think we have to continue to support this journey of European companies to market because the engineering talent, the scientific talent, for example, in your field, we were saying before that the Netherlands is an incredible country in terms of the paradox of the Netherlands. I mean, I grew up in Argentina, is that Argentina has all this land and Netherlands has nothing. And then Netherlands exports more agriculture-related products than Argentina.
Second largest agriculture exporter in the world, only behind the U.S.
Yeah.
They're a third the size of my one state, Kentucky. To your point, and that's, you know, and we definitely less about U.S. versus Europe. How can we work together? And to your point, the brilliant minds here in Europe, I mean, so many problems are already being solved, but I was never a fan of Wall Street. This is the first stock I've ever owned. So AppHarvest is the first stock I've ever owned. But the reality is protests in the street aren't going to solve problems. And people need to build companies, use private sector tools, use brilliant scientists and engineers to work together, take tons of capital, and go solve the problem in the private markets. It's the only way. It says demand for green investments as part of the panel. That we have to do that. We don't have a choice. Private sector will lead. It will rebuild our world in ways that we can't even imagine. And part of that is using the US for what we're good at, which is scale, capital, innovation, go, and then using the brilliant minds in Europe to find a way to where we can create these opportunities at scale and go fast.
Listen,
I just want to say the paradox is that Europeans have more capital, that Europeans save more, and that Europe has largest pools of capital, but sorry to say, Europe doesn't have the cojones that it takes to deploy this capital, and it takes American leadership, and America has sometimes a foolish level of cojones, but in the end, the results are in favor of the United States.
Well, on this point, and this is important, what's all that capital worth if our kids and grandkids have a world that's burning and on fire? And at some point, you know what? It's terrifying. Going public at the age I have a wife, I'm married, I got a family, fucking terrifying. It was terrifying to go public, but we don't have time. We don't have time. And that capital on the sidelines in Europe, you can sit and stare at it in your bank account, or you can help build great companies with innovators here in Europe. And we have to figure out that delicate balance. And I do think the SPAC vehicle, bringing talent and management teams into a SPAC, working with potentially earlier stage companies, and that marriage to be able to go public, it's a very good vehicle that right now has had a little bit of trouble in the last couple of months, but overall the SPAC vehicle must be a tool to get innovation out to market.
Absolutely, and I think to Martin's point about cojones, I'm Swedish, and 80% of the population in Sweden owns shares. That means you're crowdfunding basically the public markets. And I think that's fundamental, because at the end of the day, you want households to be able to be part of that growth, to be able to invest in AppHarvest. So there is capital, but it's in the bank accounts and it's under the mattresses, it's not deployed.
Yeah,
and I think that's what we need to get better.
Especially in Southern Europe, here in Spain, it is shameful the level of savings that there is in useless things like apartments, for example. It's like a lot of people think, okay, I'm going to make some money, buy an apartment. They have them there empty. They use it as a savings. The country will not become a world innovator by owning apartments. Okay, so that has to change.
Well, with people like Martin here in Spain, it will change.
Well, I think it's the combination of people like you, Jonathan, Martin, and the markets.
And the work you do.
And the markets to bring things together and to make it accessible. I think you've told us, Jonathan, that you can do it. You can have long hair, you can have jeans, and you can be a public company. The question now there are more doors to get there. Evaluate them and learn them, because there is experience. You can get experience, not only capital through a SPAC, because Martin has a team, and the vehicle there is not only about getting capital, because there's so much focus on capital, but how do you get experience, and how do you get the credibility and trust around your company that you can get through the public markets? Because at the end of the day, the revolution that you guys are funding or driving needs to be capitalized, and there's no better place than the capital markets than doing that, the public markets. So Guys, it's been a pleasure to listen to you. You are the heroes. You need to fund the heroes, and we just need to open more doors for you to do so. So SPAC is one of them. Make sure that you understand the strengths and the weaknesses of that route. But clearly, if you go down that route, you can access and source further growth and innovation, just like Harvest has done, and what you're about to do with your SPAC as well. Thanks a lot.
Thank you.
Thank you.
Thank you.